Capital with Manisha Natarajan.
Everything.com is a big story today. However tiny it might be in actual size of business or big on losses. Well, real estate is no different. The first online portal in real estate which worked on a simple business model of making sure a huge number of homes, flats, apartments were listed on the website. So you, as a buyer, at least knew your options and could compare these was 99 acres. Guess when they started? Exactly a decade ago in 2005. Now, of course, as you fast forward, there are at least 24 or more websites which have come up, all claiming to be either unique in some way or solving a big unique problem. Welcome everyone to the Realty Debate, which will focus on 2015, the year gone by, the highs and lows of real estate going online, and what lies in store for them as we enter a new exciting year. With, of course, investors already seeming a little bit tempered. Joining me today is, of course, a who's who of this business, Dhruv Agarwala, co-founder of PropTiger.com. We also have Tanuj Shori, CEO and co-founder of Square Yards with us. From our Mumbai studio, Vikram Goyal, CEO of HDFC Realty, the absolute new player in the online space, of course, a biggie in the housing space. Manish Sinha, head Quicker Homes. Nayan Raheja, Executive Director, Raheja Developers, and Sameer Jasuja, Founder and MD of Prop Equity. So we couldn't have asked for a better panel. Let me tell you what are the three big questions I'm going to be asking this panel today. Have online portals really solved the problem of buying and selling property in India? I think that's the big answer that we need. Number two, has the business already lost its charm with investors? And number three, what's the way ahead for online portals if real estate industry or home sales do not pick up in 2016? Gentlemen, thanks very much for joining me. I think there's lots that we are going to show in terms of what's there in the online space as we go along. But first question to you, Dhruv. What's going on? I mean, 2015, sum it up for us. How has it been for the online portals, especially in an environment where business has been not that great?
I think it's been an exciting year, Manisha. We've seen a lot of new companies come into this space, on the rental side of the business, businesses which are trying to create broker exchanges, and multiple new startups. So I think in that sense, for the online real estate space, it's been very exciting. I think the folks who've been in business for a while, like ourselves and many others, I think continue to see the fact that search for property buying is increasingly moving online, will continue to move online. And despite, being a tough year as such for the industry, I think folks who've already been in business are seeing their market share grow, which is great news. And, as we look forward to the years ahead, when, things do turn up for the sector as a whole, I think the online real estate industry will do even better.
Mm-hmm. Market share is growing. Tanuj, what do you think?
Definitely, actually, in any other market, whenever the market downturn happens, industry consolidation happens. This is what's happening and will continue to happen. Someone like us, and I'm sure Dhruv would be testament to the fact that probably our market shares grew significantly in individual capacity. Industry is moving from unorganized to organized space. What segment revenue share is being taken by the online classified players or the transactional players, that's another debate. But yes, definitely consolidation is there to stay.
Okay, so let us tell you what really happened in terms of developments in 2015. Overall, of course, the latest news which is making headlines is the Quicker Common Floor likely merger in a $200 million full equity swap deal. And of course, this entity may end up raising up to $150 million going ahead as well. So that's one big news which has, of course, hit everybody. Then there are other things which have happened. Quicker has also acquired Indian Realty Exchange IRX, a mobile-first aggregator of real estate agents for an undisclosed sum. And, of course, also a street view mapping services called Wonobo. So Quicker has big ambitions. Now, 2015 also saw when PropTiger.com acquired online property listings and classified player Makaan.com for an undisclosed amount. And, of course, Rupert Murdoch also led company News Corp also acquired a 25% stake in PropTiger for $30 million and upped its stake to 30%. More developments which will keep coming up on your screen. Manish Sinha, what's going on? So let me start with this whole game and story which is happening. the way I feel it, yes, the market will grow because it's a very tiny part of the whole real estate game just as yet. But the way I see it, it's kind of just serving one purpose, which is a search purpose for a home buyer. Is it really solving a problem?
Hey, Manisha, thanks a lot for inviting me on your show first. I think some of the things that we are talking about are very natural progression of the move of the consumer online for pretty much everything. Nowadays, we look for taxis online, we buy clothes online. Why wouldn't we buy, or at least research, apartments and homes and plots online? As a matter of fact, India is still materially behind the developed world in using the internet as its major initiation for real estate searches. I think we are still sub 50%, whereas America hit 95 or 100% in 2010. So I certainly think that there is significant growth ahead of us, not really behind us yet. And as we kind of look at what the consumer really wants, I mean, obviously they want a whole lot of things from the real estate solution environment. It is the biggest investment all of us make. Even today, when we are talking about the real estate class actually being a little bit subdued, we still have, for many, many households, more than 50% of their savings and their net worth sitting in real estate. So I really think right now is still the beginning. From a quicker standpoint, we actually have been seeing this segment of ours growing significantly, and that's when we said, hey, this seems like the right time to actually invest in solving this customer need, and here you go, we have quicker homes. Now, clearly, we certainly believe that you don't just solve the search problem. Obviously, you have to solve the search problem. If somebody is looking for a right house for themselves or a great investment, taking traffic and moving around in all our cities for 2 hours and then finding that, they're only able to see 2 houses a day is really, really limiting. So I do think clearly...
Okay.
They have
I get
to.
that. Manish, I get the fact that search and discovery itself is a big step and is a big start for the discovery in buying a house process. I'm only worried, and this is a complete devil's advocate question, that why is everybody just chasing that very, very easy pie, which is search and discovery? Sameer, come in here. I mean, according to me, it just seems to be too many
I think that's a little bit...
Okay, go ahead, Manish.
I think, Manisha, I was actually going to say that the first step is search and discovery. Mm-hmm. And as compared to the US, where the internet came after the MLS was there, search and discovery was always there. In our country, even today, no more than 25% of actual homes that want to be rented are hitting the internet. So search and discovery is a problem that has to be solved. Obviously, when we have folks like Square Yards and Prop Tiger on the show, on the segment that they fundamentally address, and I'm talking more about the builder segment, that has pretty much come on the internet. But the search and discovery for apartments for rent, for PGs, that is still very, very in a nascent stage.
All right.
And therefore, the search and discovery problem is not solved yet. Then there is the other problem, Manisha.
So Manish, I think my question was a disconnect because I'm basically looking at the buying-selling problem today. I understand that from a rental, but from the point of view that you're looking to actually acquire common flow, which is now public knowledge, we're going to focus mostly on buy and sell today, because that, according to me, seems to be a huge problem still when it comes to a buyer. Sameer Jasuja, search and discovery, that's what's moved online. I mean, we will go back to Tanuj and Dhruv. Everything else is still very, very offline. And is that a problem which can be resolved online? Can that really happen?
See, Manisha, I think, most of these internet businesses are being funded by venture capitalists. So let's just first try and understand why search and discovery has really been funded, because every VC looks at a very large market size and looks at scalability, looks at exponential growth. And that's where they see that happening first in the classified segment, because we all know now it's $1 billion plus market. And internet space has just about taken not even $50 million out of that till now, right? And globally, it has been seen that internet search and discovery happens more on the internet than the classified newspapers. So that's one market that they are gung-ho on, knowing fully now that the market hasn't expanded so fast as it should have. Given the technology, given it happened in the travel or the job space as it should have happened, like 99 acres has taken 10 years and still has reached the 100 crore turnover. That's not very high, I would say, with that respect to that.
Why is that?
Why
is real estate taking so much more time?
I'll answer that question to you. That's a very good question. And the basic problem of search and discovery in India is that we don't have exclusivity in the market. So what happens is that it ends up being just a broker search website, because all the broker is putting in is some amount of real estate information. He holds the address or the address, so there's a lot of duplicacy. Address is not being shown, so there's a lot of duplicacy happening because the same property may be put by the broker many times through multiple brokers.
Right.
So really speaking, till the exclusivity problem is really not solved, the scalability on the classified segment is not going to happen that quickly. That's one. On the transaction side of the business, globally we have not seen internet companies really take on and become large players in that space. That predominantly continues to be an offline play. And if you look at it globally, brokers are mostly customers of internet websites and doing transactions offline. Yes, MLS has been there, but MLS was actually a broker tool and not a customer tool.
Okay.
It was creating transparency amongst the brokers, and MLS was only successful because there was exclusivity in the market. Seller went on and gave an exclusive mandate to a broker. That broker could easily then list that property anywhere, and there would be other brokers who would be contacting that broker through the MLS space, and the transaction would get concluded.
Okay. All right. Nayan Raheja, so are we to understand globally, because real estate, what's moved online is literally search and discovery and closing of the transaction. If it's not moved in the US online, then hey, how is it going to happen in India? Would you agree with that? That it's just a hard process to crack?
First of all, let me add a bit of information I want to update. In January around this year, Raheja developers sold about 500 apartments completely online with a startup called Book My House, where we were actually doing transactions online. Now, the important thing to note here is that we had 15 lakh rupee apartments and 20 lakh rupee apartments. And it was a government lottery project, and which was primarily the reason why people were able to sort of book online.
Okay.
But having said that, the real estate sale or transaction problem is a big one and a complex one. And you need to understand, what kind of problems are we solving from the seller viewpoint, which is us, and from the buyer viewpoint, which is the client. So if you ask me, we pay, lakhs and lakhs of money every month to a lot of these startups all around us for lead generation. But, ultimately, what it ends up when we start actually calculating, whether we got any bookings from that, it is extremely dismal. So, in my opinion, the whole lead generation platform and selling of leads and trading of leads, it's not really solving a problem for the developer community. And especially also because of the fact that, when I list my property, with a online company, and I'm putting a certain price on it, my broker is coming, he's putting a different price, then a third person comes, he puts in a third price. And at the end of the day, there's some guy who's coming in, who's putting a price which is not even existent in the markets, just so he can get all the leads to him. Which is sort of devaluing, our own property by listing it on these listing platforms. Okay. So that's not really helping us.
Right. We do know
on the
what's
buyer
happening. We also know that there are multiple
listings
happening. So let me bring in Vikram Goyal here. Vikram, it seems that there is this company called Unnati Fortune, which basically gave all its inventory to a website, and then they became a listing website. Nayan has just talked about a listing website that they sold 500 apartments through. We have now your ibidmyhome.com, where you have Purvankara and Shobha selling all their inventory. What's really going on? Are we going to see a situation where you'll have every developer launching a listing classified site and probably their own internet model and just hoping to sell a project? I mean, how is this model going to work? Because I also hear on the other side from players like Realty Compass, 99 Acres, that when they pass on leads, developers sometimes don't even acknowledge them. They may close them 6 months later. They actually don't even give them credit that that lead has generated from 99 Acres. So there is a crisis of trust even when it comes to online business, isn't there?
Manisha, sure. First we need to figure out who are the stakeholders who are involved. So on one hand, we have customers. I'm sorry, I'll sort of take a longer route, but try and make it fast. So on one hand, we have customers who are wanting to buy, which is evident from the growth in sanctions of home loans which is happening. On the other hand, we have developers who've been really wanting to well and trying various models where they're trying to sell the property they have with them. And then we had, till about 5 years back, classifieds online like Magic Bricks and 99acres.com. Now what has happened is, in the last 2-3 years, because of a lot of e-commerce based portals like Housing, like Common Floor and a couple of others, that suddenly the role of this .com now is a little sort of, I would say, blurred. So as long as they were doing online classified, they were collecting the leads, they were handing it over to developers, or they were working with brokers to conclude it, it was fine. But it's just that, on one hand, we have real estate in India, where we don't have a regulator. We have real estate as a state subject, which has multiple laws in each city. So customer who wants to buy a property exactly doesn't know what all documents he should be looking at before he buys a property. And to that extent, the role of this .com becomes very, very important. So I think, if you figure out what role they should be playing, will define where they would make their revenue from, and which would define eventually.
Why don't you answer that question, Vikram? I mean, globally they're saying that transaction is not the model, if it's search and discovery which is the model, but on search and discovery there seems to be a complete trust crisis or a lot of trust crisis. Then how do you resolve that problem?
Normally a lot of us probably would look at the model which is prevalent in US, and there are these companies which are valued at multiple $billion. Now, one has to realize that, in US, a lot of market is actually, the resale or the rental market, whereas the risk of construction and the approvals and all those things probably don't apply that much, which is very, very different in India. We don't have a regulator, as I mentioned. There are a lot of transparency issues which we have. So to that extent, I think the use of technology cannot be denied. But at the same time, fulfillment of real estate or a property buying experience, which for most Indians is probably once in a lifetime experience, is the most emotionally and financially involved transaction they would ever do in their lives, cannot happen online. It can always start online. You can search on it, you can research on it, but eventually you need fulfillment to be done by individuals. You would like to go and see the location, you would like to see the construction quality, the cement which is lying there, the labor which is there, the cranes which are there, the neighborhood, the road, access, schools, hospital, colleges, before you eventually take a call. So I think there is a lot of screening which a .com can do.
Okay.
But apart from online sales in micro markets once in a while, largely I don't think is going to be a phenomenon going forward in the near future.
All right. So you're saying screening is the only process. Dhruv Agarwala, you're trying to actually stitch up the end-to-end transaction. A lot of you, honestly, were actually large institutional brokers who've decided to go online. So run me through that, thought process. What is it? Is it a valuation game if I go online, because you're still not being able to close any of your transactions? You've still got an army of salespeople there, which is closing transactions.
So Manisha, we were always online to begin with, because the only difference being that everybody else who calls themselves a pure online player, they were generating leads online and passing it on to either developers or third-party agents to close.
Okay.
And when we started, we generated leads ourselves, and we closed those leads on our own as a company. And we think because we did that, we were able to provide a world-class consumer experience, which is sorely missing in the market today. I think Vikram made a very interesting point that in the US, the reason why search and discovery is important and why the big companies have become big on the back of just search and discovery is because of regulations. Manish also mentioned that there's an MLS there, which is again another reason, and the fact that brokers are trained, they are licensed, they're held accountable. So for that reason, search and discovery platforms became big. In a country like India, where there is very little regulation, we keep talking about it, it's yet not happened. I think it's very important for a branded player to actually handhold the customer through the entire process. Again, as Vikram mentioned, it is a once in a lifetime purchase decision, highly emotionally charged, the biggest purchase decision you'll ever make in your life. And if you feel completely at sea doing that, I don't think the customer problem is being solved. So merely generating a lead by partially solving the search and discovery problem, and then handing the consumer over to some third party and not tracking what happens post that lead is handed over, I think is not solving a core problem. And that is why, in my opinion, that's the reason why these companies, despite being in the business for 10 years, haven't scaled up. I believe, from our perspective, the reason we acquired Makaan.com is there are two ends to this entire business. One is the demand aggregation piece, which, at PropTiger, we were limiting it to individual projects. Through Makaan.com, we are expanding and broadening it to the secondary market space along with the primary market space. And we're bringing on third-party sellers onto the platform itself.
Okay.
And as far as PropTiger is concerned, it is going to continue to be a seller, on the Makaan platform itself, and provide that branded service which consumers are looking for. And as long as we continue to do a good job of providing this branded service, I think as a company we'll grow. But I think for an online portal in India's context today, trying to be purely online without providing a hybrid service, I think it's a long road ahead.
It's a tough game. All right. Okay, gentlemen, hold your thought. We're going to come back. A quick break. We're, of course, on the year-ender 2015 special on real estate online business, the highs and lows in 2015, and, of course, the way ahead. We'll be back in just a moment. Welcome back. According to the research firm Traxon, in the online real estate space alone, we've seen investments worth $298 million, or about 2,000 crore rupees, in real estate tech startups in the last 5 years. Lot of excitement. We remember that big housing story made headlines for many, many reasons, and of course, SoftBank's huge investments in it. But 2015 has also been a big story for consolidation. PropTiger bought Makaan.com, CommonFloor.com may be merged with Quicker Homes, Housing.com has shut down dozens of its business divisions and operations also in 25 cities. India Homes and India Property, both VC-backed firms exploring a potential merger in an all-stock deal. RealtyCompass.com unable to raise funds. So, Tanuj, my question to you is that you're one of the new players on the block. You clearly started off as an offline business addressing NRI's demand for housing in India, but have gone online today. Trying to raise funds as well, your second round. What's going on? Has the investor interest died down now?
Not at all. In fact, why we had delayed fundraising so far was partly because we were bootstrapped. Now, I'll tell you, actually, a lot of questions came up on this show that we actually tried to answer all those questions before we started. We are the youngest player, probably we are the biggest player in the room.
But you have gone offline to online,
right.
That's for
so
sure.
That's
you were totally an offline player who decided we're going to put a .com.
Exactly. Not .com, but we tried to solve what role our online would play for us in that entire offline play.
Okay.
For us, why didn't want to be an online classified player? It's a $150 million revenue market. Like you said, $300 million of capital has gone in.
Okay.
Maths didn't add up. Transactional play, $3 billion market. Yes, we had to be there. What role could online play? Do we want to be just a search and discovery platform? Probably we don't earn enough revenues from that. But yes, would online enable a customer to find a lot of information dissemination online? There is a certain 10% of the market, soft launch market, which could be sold online. We did over this weekend 500 transactions online. There is a certain segment in terms of scalability.
Specify what you mean when you say you've done 500 transactions online.
So that entire inventory management happened online, information dissemination happened online. People went, booked their homes online. People saw everything related to the project in Bangalore online. So end-to-end transaction was online. But having said that, what I'm saying is out of the 5,000 transactions we have done in the last 12 months, only 500 happened online. So there is a very limited segment which could be moved purely online.
Okay.
In the other part of the segment in real estate, online has to act as an enabler. Like we believe in hybrid commerce, like online and offline have to go together for us to get to market share. To answer the question whether global players have scaled up, yes. So there are players like Urban Compass, there are players like Redfin, there are players like Lijo. We have built up significant big transactional models.
Okay.
We have shown in the last 2 years, we're sitting on 100 crores revenue, which was more than what 99 acres has built in the last 10 years. So it could be scaled up. Yes, which segment it needs to be scaled up, probably till the time regulations come. Secondary is not the market where we could monetize the segment enough. Primary is the play, because in primary we can control the inventory, we can control the supply chain, and we can build upon various distribution channels to how to build. See, real estate is not very different from any other asset class. There is a sourcing, there is a demand. How do you tag together the value chain and how do you monetize and play the unit economics? That's what matters.
All right. Is the primary market, Sameer Jasuja, in trouble? I mean, everybody is chasing the primary market because it seems to be the best market to go after, all white, probably less complications legal-wise and paperwork-wise. Is there a limit, especially in a downturn market, on how much this primary can go? And is that the reason why investor interest is now becoming tepid?
Yes, Manisha. First of all, the primary market is in serious trouble. We all know that. We cannot deny that at all. New launches are down by 75 to 80% across India. If we look at new launch sales, even with older projects that were launched but are under construction, we're down by 80% over the last 1.5 years. So genuinely, when sales are not going to happen, then how is anybody going to be able to make money on the transactional side of the model? More importantly, right now, the developer is trying everything possible to try and make his sales happen, and he's going and experimenting in all sorts of ways. Some developers are doing their own direct sales models. They're really heavily betting on online as well as offline as well. But I have seen these markets when the markets are really, really good, where there is a lot of underwriting that happens much before the project is even launched, and then at that point in time, online is going to suffer as well in the primary space. Today, they are seeing a different kind of a problem. When the markets are really good, they're going to see a different kind of a problem. So till the markets don't stabilize, till then you're going to see a huge problem on the primary side.
I don't think a problem of market being very good and them seeing a problem is a big problem. We'd all love to see a good market.
You see, I'm talking about from an online play. If you look at from an online play and the online search and discovery play I'm talking about, if you have brokers like Investor Clinic who will go and take 70% of the inventory right away in a market that's going, and they'll sell off in the next 2 months to investors and all that, what is the online player going to get in hand to go and sell? End of the day. So there is a big challenge out there today. That advantage is there with the online players because there are enough and more developers sitting on a lot of unsold stock that is just not moving. So they are willing to experiment and do everything under the book to try and make that happen.
Okay, so you're saying that the downturn is actually good in some ways for online players, because they have developers actually queuing up to experiment and commit their inventory to them. Vikram, come in here and just run us through what your thought process was to, in all of this, launch an auction platform.
Manisha, for example, one of our colleagues just mentioned that, the format which is going to work, and which is what Dhruv mentioned, which is what Tanuj also mentioned. So we also coded something called O2O, which is online to offline. That transaction would start online and they will finish eventually offline. Coming to the auction platform, we've been talking to various developers who've been sitting on assets worth 500 crores to 2,000 crores already inventory with them. And when you look at the data of people who are ready to buy flats, there's a huge number of people who want to avoid the risk of non-completion, who want to avoid the risk of regulatory issues coming in between, or clearances of environment or forest or anything, and they would want to buy a house which is ready to move in. But at the same time, the entire market, the momentum till about 6 months back was that you pick up a property at a pre-launch stage, and either you have the brokers segregating and that's how you sell it, or you take it online and that's how you sell it. So to that extent, the market didn't actually sort of figure out how to sell a ready-to-move-in property. And it took us about 3-4 months to sit down with the team. Should we do a subvention where, they reduce the interest rate for some time and that's how we go about it? Or should we just plain vanilla pass on the discount to the customer, but that will give a very negative signal to the market? And eventually we realized that, we would go ahead with the price discovery model, wherein we discount the property to a base rate which we recommended to them, which was about 10 to 15% lower than the average transaction rate in the market. And we said, let the market discover what they would want to pay. So if for someone, the price of 3,000 rupees as a base rate was a good rate, the person bid on that rate. And if for someone else, the rate at 3,500 was a good option, they bid that. So all this is available online, live, all the statistics. And if required, you can go and revise your bids.
All right. Manish, I am coming to you. Because we restricted this whole dialogue to buy and sell. Now, if you can just kind of tell us what the strategy is of Quicker when it comes to buy or sell. I mean, you are looking to acquire common flow. That's common knowledge now. I don't need a commitment on that. But in terms of, forget the rental part of it. We know that that's an unaddressed market. There is this whole question of a vertical versus a horizontal player like you, right? What do you think do you bring to the table which, let's say, a 99 acres or a Magic Bricks doesn't?
Yeah, Manisha, first, I do know you mentioned you don't want to comment on that, but I must say that the Quicker common floor deal is a common speculation. I would be limiting the use of the word knowledge. However, actually, the other ones that you mentioned, Indian Realty Exchange and Realty Compass, we are actually very proud to have them on our team. I would also say that, this is actually consolidation in some sense, but not necessarily because of lack of options for people, but because fundamentally the question that you asked, and I would try to limit it to the buy-sell situation, is that people really need trustworthy information to make a decision online. And I think it is perfectly fair for them to make half of the decision online, which is showing an interest or writing a 3 lakh rupee check to, the tool that Vikram's team has built, or buying only to the booking extent on, the Square Yards one or many such developers tools that are out there. But even to get there, people really need, even writing a 20,000 rupee check or a 3 lakh rupee check, as Vikram just mentioned, is not a insignificant exercise, right? People investigate for years and months before they buy a 20,000 rupee cell phone. So it is unfair to say that a normal person who's trying to do this major real estate investment, where the first 20,000 rupee is just a commitment to pay the other 70 lakh, is going to be done without building trust. And therefore, internet plays a significant role. Whether we are talking about the situation of somebody trying to buy a really available home today or buy a piece of commitment from a builder, there is a need to go through so many different dimensions of information for building the trust. And I think that is the reason why I actually believe that in this last 3 years, I've actually seen trust going up by leaps and bounds. You mentioned that the trust gap exists. I would like to mention that it is shortening, it is reducing.
Okay, Manish, hold your thought there. We have to take a break. That was a really long answer, but I get your point. Trust deficit, well, we're going to come back and take a look at whether that has got reduced, because that's a big one to fulfill in the real estate business per se. We are going to go to Nayan Raheja and get a developer's perspective once again on the online real estate business. Stay with us. We're doing a year-ender, December 2015. That's where we are. 1 decade of the first online real estate business, 99 acres. And of course, now we have 24 or more in the same business. What is 2016 looking for all of them? Welcome back to this very special discussion on the year gone by for real estate online business. Lots of excitement happened. There were many websites which for right or wrong reason made headlines. Big monies came in. There were mergers. There were consolidations. But the question that we are asking is, has it really solved a problem? Number one. And number two, has it narrowed the gap on the trust deficit which seems to exist in this whole buying-selling exercise of real estate? Nayan Raheja, do you think that there has been more transparency because of online? Really? Has it solved to any degree the transparency problem?
One of the things that we need to understand is that people are still buying. If they're not buying through, any of the online portals, they're still buying from the developers, whatever transactions are going on in the market right now. Okay. If there was just one place, where people have the faith and trust that, these are the go-to people where I need to buy my property from. Right now, ask yourself as a consumer, if you wanted to buy a property what is the right way that you're going to follow? You're probably going to go on a search and a discovery platform. There's various ones of those. You're probably going to, sort of inquire there, and it's going to go to a developer. He's going to call you back, going to do a site visit, and, you're probably going to do this for maybe 6 months before you make up your mind. But at the end of the day, you are still not, there's not one online portal which you can say or trust that, this is a place where I can buy from.
Sameer Jasuja come in here. So that's a very, very big statement to make, that there isn't yet. I mean, for example, an Amazon is pretty much now my go-to place, and for a lot of people in terms of the trust factor. In real estate, do you think, in 2016 we'll see the emergence of one of those big names for a very trustworthy player? And number two, that big trust question. Has online been able to restore some of the buyers' trust?
So let me first say my advice to all online players is going to be that please don't try and solve the trust deficit problem. You don't know the problem that you're getting into. The trust deficit has been created purely because of the developers. There's a huge execution issue. There's a huge financial issue.
Which no online portal
that no online portal should try and even commit to try and reduce that trust deficit, because they don't know what is happening inside the developer's company. And the top 20 developers have created the maximum mess in the market, as you can see, with respect to execution delays, with respect to projects getting stalled. If you are going to put your neck on the line to try and solve the trust deficit problem, you're in very serious trouble.
Dhruv, would you agree? That's a difficult one to quickly, one line.
See, ultimately it's trying to provide as much information as you can and helping the consumer make a choice.
2016, very quickly. I'm going to take a quick, do a round robin here. Sameer Jasuja, are we going to see any mega deals? More money being pumped into any of the online real estate
I don't think
players?
so at all. I think there's enough and more money that's already come into the market. Now it
you
is
see
for
more
the
mergers and acquisitions,
absolutely,
more consolidation?
absolutely. I
Okay,
see
more
more consolidation happening.
Tanuj, will you raise your monies in 2016? Are you thinking that you will get the valuation you've asked for, or are you going to mellow your valuation
We're not
expectations?
playing a valuation game. Capital is irrelevant. Scale would happen.
Scale will happen. Capital is irrelevant. You don't need capital.
We are a
My
bit
goodness.
positive.
You're a profit-making company?
Yep.
All right. Okay. Fabulous. I mean, they're a profit-making company. I'm wondering what you're doing at Prop Tiger, profit-making, so I shouldn't be asking that question.
It's very simple. I think in terms of 2016, capital will continue to come. It will come to quality companies who are performing and who are solving the consumer problem. So I think...
Will valuations be more normal? At least let's accept that. They're not going to be as crazy at what housing was valued at. Was that the biggest spoiler of the party?
See, ultimately, valuations are not just limited to the real estate sector. We've seen crazy valuations across the board in the tech space. And, people are talking about valuations, becoming more sensible. And if there is a good company with good track record and performance, they will get a high valuation because investors do want to get into a good company. I think what's going to happen is companies who don't have a business plan and who are just trying to, have a momentum play are going to have trouble raising capital.
Okay. Manish, quickly come in here. I mean, Realty Compass, I knew, basically gave into quicker. They tried to raise funds, they couldn't, and they basically, most of the deals are now all stock deals, even whether you comment on common flow deal or not, but that's the way it's going. Prop Tiger Makan was also, literally, isn't it, Dhruv?
Sorry?
That was, Makan was also an all-stock deal?
We're not commenting on that.
It isn't it? All right. Okay. Not commenting, but that's what we hear, or the market information is. And you have India Homes and India Property also looking to an all-stock deal. Manish, come on, let's be honest here. Next year, the sanity clearly has returned. Nobody's willing to put very big cash bucks behind acquiring anything.
Well, I think there is a question you asked where in 2016 will we see consolidation? I'd say yes. Will we see more money flowing into good companies that are actually on the track to solving a consumer problem and eventually being profitable? I see a lot of that will happen in 2016. I clearly see a lot of action towards that already. I do think that, a lot of these deals will actually be more stock deals right now, because that is the right way to value companies at this moment, because they are still in the build phase. The consolidation is happening to create a good solution across the small little niche solutions that different companies have. So
Okay.
like, for example, a company like ours that is creating a solution at Quicker that is beyond just a vertical. You know, you have a problem
Okay, but I'll
buying a
have to wrap
home, we
up.
can
I get that. So
these kinds of things will happen.
Okay, fair enough. So you're saying that all stock deals, there's nothing wrong with it, consolidation will happen, monies will continue to flow into good companies. Well, as we say, this is just the beginning of the story. Real estate, we've not even scratched the surface yet when it comes to online. Gentlemen, thank you very much for joining me today.